feel that there was something geopolitical about to transpire. And that's what we got with copper this morning. Tuna salad. All right. Morning checklist. We'll talk about some gold. We're going to talk about some copper. We'll talk a little bit about Tesla. All right. If you're not with us before the market starts, you are someone else's meal, simply because when this market opens, that is going to be an exit for a lot of the futures traders and for a lot of people who are making overnight positioning and hedging ahead of this news. So we're going to pay very close attention to what is going on with the SPY this morning, chopping around under volume weighted average price, looking for these VWAP bands to expand into the day, looking for a little bit of reaction to this news. We'll talk about what's breaking out, what's breaking down. But on the macro side, these are the headlines. And as again, some people had asked me just to comment on a number of different macroeconomic events, get a little bit of insight, expectations moving forward. Well, I just want you to get a little bit of a taste of that. Key thing here, the Federal Reserve coming out and saying that they believe that tariff-driven inflation is going to be responsible for persistent inflation. It's not the money printing, everybody. It's the tariffs that do it, even though it didn't cause inflation the last time we had tariffs. So it's definitely not the money printing. This is not a rant. But they're saying that they're not going to be cutting rates likely in July, despite the ongoing talks among policymakers. Traders are going to want to be watching the CPI and PPI as they come out. Stronger data likely pushing rate expectations further into the fall. The Goldilocks markets are, it's right where we are, right? Very strong momentum, very strong capital flows into the global financial system. This has been, 90 days since real liftoff. 90 days ago is where we were when the insider buying, 5-day insider buying to selling ratio accelerated, had picked up because of the buying that had happened on the 8th and the 9th. And since then, we have seen a very persistent move higher. And keep in mind, two things had occurred, right? Back then, you had bonds and stocks falling at the exact same time. That is not good for anybody. All the leverage in the system was unwound and the markets were collapsing. Well, we had a policy shift. We had accommodation from the White House. And the question is, in this environment, with all of these with all these tariff expectations upcoming, are we going to see some other kind of sell-off that leads to another level of panic? And I can understand if people are concerned about that, because we are having these events over and over and over and over and over and over again, right? Once a year, a 4 Sigma event. But as I just continue to remind you, as we walk you through the equation that we do and we analyze, right now, there's not a lot of stocks breaking down. Now, the slowdown in buying is going to happen. And what we're looking at right here is just the S&P 500. We're looking at the number of stocks that are breaking out in a very specific amount, and that is 5% a week. Takes a little while to get there. When you're on FinViz, you got to go all the way down. All the way down. 2 week. Above 5. Up on the month. And a simple beta of 1 to 2. Somebody had asked about being able to do this. Well, I'm showing you how to do it. This is the poor man's version of momentum. And it's important, right? Because from mathematically, what you're looking for at this environment is just capital flowing into the market. When you have a lot of S&P 500 stocks that are breaking out, up 5% on a week, up on a month, so there has been momentum pushing it up directionally. You have 15 names, and that is ALB, Boeing, Delta, big breakout today, very strong earnings report, 12% move, GE, Vernova, Intel, and there's all of these different reasons as to why these stocks have made these moves, but there's a lot of industrials. Blake was talking about this last week, materials and industrials. United on the move today, following Delta higher. Ralph Lauren's on this list. Tapestry is on this list. TPR, very strong, very smooth momentum, taking this stock higher. And that is a Gianni stock if I haven't seen one yet. Ralph Lauren, same exact bucket. So you got 15 companies that are breaking out, and then you turn it the other way. What's breaking down? Now, when we bring to our actual number that we utilize, we do it a little differently. Every single sector has a different set of coefficients, and that's all buried in academic paperwork. But as you can see, there's 15 stocks in that pattern, one to the breakdown side. So that takes you to 14. Now, you're going to see momentarily that our number is a little different, but the point is, at any given moment, you are seeing capital on the bell curve, at the end of the bell curve, in directions of how stocks can move. You are seeing it happen, money flowing in. And that is helping support the S&P 500 and helping maintain it above that 20-day moving average. Important, right? When we break under these two lines, that's an issue. But when we break above this line, the FNGD, that's the real sign of leverage leaving, particularly in the Magnificent Seven stocks and the FANG stocks. And pay very close attention to the XOSS, which is the bearish ETF around semiconductors, because semiconductors in the AI trade are so significant. And if this breaks out, there's something brewing. Just pay very close attention to that. So, the idea here that these tariff risks can lead to something, yes, a sell-off can happen, and if it will happen, it will be sharp. But once again, our signal will go negative. We will see that breakout on the FNGD, and that's the time to actually pull out the ant asset. Right now, Goldman notes equities are in balanced growth. Inflation regime warns the tariff risk could trigger stagflation, forcing the Fed to hike, not cut. Maybe. They should have gone to 6% 3 years ago. They didn't. And resultantly, they could have drowned inflation, but they didn't. And the real inflation remains in services. It remains there, locked up. We'll continue to monitor wage growth. But at the end of the day, it's the money printing. It's the expansion of credit in the system that continues to provide ample inflation. It is not supply chains, and probably is not really tariffs, but it gives them an excuse, because if you go back and you listen to Powell talk back in 2021, 2022, he said that we were not going to be normalized on inflation until 2025. Well, here we are. And now he's saying that we won't normalize until 2027. And now it just becomes a question of, are we ever going to normalize? And if we just going to accept unofficially a 3% inflation target unofficially? Because at the end of the day, remember, the Fed has hidden from the American people major policy decisions over the last 30 years, particularly inflation targeting, which they started in the 1990s and didn't announce as formal policy until the end of the first decade, maybe even 2012, under a Bernanke speech. Keep this in mind. Okay. We are at 5 on our official number, but we are nowhere breaking close to the 20 and the 50-day moving averages of the FNGD or the SOXS. And why does this matter? Well, it matters because, again, we're seeing weakness persisting. We're seeing a slowdown in the number of stocks that are breaking out. But today, you have strength in MLI, FCX, and SCCO. And obviously, that is tied to the back of the copper trade. Now, if you were watching, in our main room in the afternoon when I had come in, I had followed Blake last week, and he had said money rotating to industrials, money moving into materials. And I do not believe in coincidence when it comes to anything locked up in politics. As you note, as I said, K Street is a very busy place. There is a lot of money flowing in there, and it is not just about influencing policy. It's about gathering information and trying to assess what policies are going to be put in place before they're put in place and front-running those policies. So it's not a coincidence to me that we saw massive amounts of movement on these copper stocks that move above that 20-day, that hold above that 200-day, starting a week and a half ago, 2 weeks ago. So now what happens? Well, you could chase this momentum, but we are already stretched here. And I just go back And I use this to just remind people that the move has already happened, right? This is why you have to be way out in front of this. And this is why you have to be willing to take some risks and pay very close attention to momentum as it emerges. The relative strength index of our FCX has remained above 50 for a period of time, but started to break out again back on the 20th of June. The money flow index saw a return to strength about 3 or 4 days ago. On the 1st. The MACD turned positive on the 26th. The ADX back here, 23rd. Everything heading in the right direction. Everything moving positive, and they all work together. Yes, they're all momentum oscillators, and they may say many of the same things, but they have certain differences in terms of the trend that they are following in price, in volume, in movement, in strength. So always watch this and look for those stocks that are breaking out, and we'll talk about those in a moment with our trading view screens. This is where you want to be trading, back at these levels, and you want to just set tight stops, because what can happen is you put yourself in a position to recognize and allow the news and allow the policy and allow the story to take the position for you. If you're wrong, and you have a tight stop. Fine. That's fine. But if you find yourself in the middle of these rotations, in the middle of these moves, and again, as Blake walked you through and saw this with deep currents, the move from 40 to 46, if you were out in front of this, could be substantial. So combining that information, what's happening with options, paying very close attention to the indicators, the oscillators, and what's happening on the RSI and the MFI, the story will ultimately emerge in the price at a later time. And I just simply always note, the story has already happened. The move has already happened. And a lot of people were missed out on the momentum move that happened on April 23rd. They wake up 2 weeks later and they say, how the hell did we just rally the way that we did? Well, the news had already happened. The story already happened. And all of the stories and all of the events are really transpiring around these key moving averages and these key indicators. On top of that, look, what's weakening? Monster, KMX, IDT, name I have not seen in a long time. IDT, wow. This is one of those names that will go back in time and just a sheer reminder of what private equity can do. This company went private, spun back out. Whew, look at that. Man, I forgot about this guy. That is strong. Strong momentum starting to break down. 20-day opportunity here from that 66 level down to that gap, 50-day moving average. Pay close attention. In addition to that, looking at Monster, MST, Monster Beverage. Breaking down. That's not good. But once again, if this gets down to its 200, may present a buying opportunity. Also pay very close attention on the RSI and the MFI. If we get into oversold territory, that has been a place to potentially see a reversion. If this breaks under its 200-day, it's got some room to keep moving lower. I don't understand that company. KMX, was that CarMax? Yeah. CarMax. Oh, it's waking up a little bit. No bid, no trade, no nothing there. All right, what's on the watch list today? GNC, PANL, my old friend. PANL. Let's buy a boat. PANL is a northern sea, goes through the shipping canals in the Arctic Circle, and has been a insider buy, significant insider buying back at around that $5 level not too long ago. 4 up to 5, trying to get back above its 200-day moving average, but we'll pay very close attention to that. Not really a trading stock, one of those stocks that you buy and you hold. 7% yield. STNG, we're starting to see all the shipping companies back in focus. This is obviously linked and tied to ongoing concerns and questions about the global shipping industry. We can wake up at any given moment and find ourselves back in tussle with Iran, but pay close attention to that price. As you can see, that break above that 20 and that 50. Man, my voice is going today. All right. Bierman was on top of Monster. Not surprising. Tesla, weakness, holding above its 200. Very choppy. We will be talking about trading it today in our second live session at 2:30 today. All right. So 9 o'clock. LABU and Nail. Yeah, we can take a look at that real quick. LABU continuing to be a tour de force. We talked about this a couple of times. LABU finding its way above that 20 and the 50 about 4 or 5 days ago. 8 days ago, forgive me. Strength on the MFI might just be taking a little bit of a breather today. But this has actually been showing more strength than even the AI stocks. RXRX continuing to move. We've talked about RXRX. Still trying to see if we can get a test up to that 50-day or 200-day moving average. You guys are going old school with Herman Cain stories today. This chat is lively and odd. All right. STNG gas and Nail. This will be an interesting one to see how the home builders actually respond to all of this news around the copper spike in price. And we're going to talk about copper in a moment. I just want to note, however, it wasn't Little Caesars, was he? I thought he was like Godfather's Pizza. I think it was Godfather's Pizza. Housing prices still very cheap. TMHC, Taylor Morrison, continuing to strengthen. We're seeing strength in these names. We've walked through a couple of them, but once again, F&Z score, F and Graham score as well, showing a lot of these housing names, and these were the value stocks that a lot of 13Ds were showing back at the end of the second quarter. So that now goes back about 75 days since ample purchasing in those stocks. But once again, housing remaining lower. The question really is, at the end of the day, what are housing stocks projecting about rate cuts in the future? And we've already discussed that the Fed does not seem willing to take action on that. At some point, however, we are probably going to see that move on Mr. Powell by Trump and the aggressive policy expectations and hopes for this administration that they are going to cut interest rates, which would be very beneficial for the housing sector. That would be a long-term play, and there will be a lot of chop along the way. But housing still cheap. TPH, TriPoint. TriPoint's in there. Champion showed up on the list the other day. Cheap companies. This is what trading book value is 36 on this. So still trading under its book value. That's where the funds were putting their money. They were putting their money into CoreWeave and housing. CoreWeave and housing. And now you're going to see a lot of money flowing into Circle as well. All right. It's been a while since I even thought about this, but let's give it a go. Well, Trump has announced a 50% tariff on all copper imports under Section 232, effective August 1st. Copper futures spiked. What are we up today? We're up a lot. I have not had to think about copper since 2008. I used to write copper reports, international copper reports for a marketing intelligence company that was an arm of Denali Consulting. And whew, man, were those dense. All right. $5 takes you up to 580. That's a big spike. That's a big move. And the worst is not going to be over, because this is going to probably be a very frantic trade for the next couple of days as positioning is handled. A lot of people were shorting copper, right? Because at the end of the day, they were expecting a recession. Obviously, concerns about housing. Well, now you got to cover your positions. And with the weakening dollar as well, this is problematic. These tariffs are going to target Brazil as well. This is a massive escalation in bilateral tensions. A lot of this goes back to Trump and Bolsonaro and Luna and, you know, just we are all just characters in a WWE style geopolitical world. And the only thing that we can really do is react, right? This is one of the reasons why I don't like shorting commodities. And one of the reasons that I really don't like shorting in general, because sometimes you wake up and these massive unwinds are happening. And it's why you got to pay very close attention to the technicals that we were talking about this morning. But the impact, look, this is a boost for U.S. miners. We are, I believe, the 5th largest copper producer. We'll talk about that in a moment. But there is inflationary risk here. We've talked about the idea that natural gas, right? When natural gas prices spiked after the Ukraine war, when we saw oil prices move higher, there are deep concerns around inflation, the input costs associated with it. This is what the Fed is signaling toward. But that said, those are typically temporary. And in addition to that, just pay very close attention to the fact that this is largely going to be posturing, and the expectation is that they're going to reach a deal because we wait until the very last minute. So everybody's going to panic for the next 20 days, and then, you know, we'll probably end up with a taco trade, and we'll see this abate. But this is just going to be the hysterics for the next 20 days. Now, top producers in this are the DR, the Congo, Democratic Republic of the Congo. Oof. Let me humor you with something. The very first time that I met one of the top geopolitical quants in the world, I met him at a conference out in Las Vegas. He and I became very good friends over the years. He runs one of the largest quantitative shops for geopolitical risk and sells to Goldman and BlackRock and the World Bank. And he's an academic up in Canada, lives down in Charleston. So he and I were out one day. We were down in Naples, and I asked him a simple question. I said, tell me something that is really going to shock me about geopolitical risk that you know that I don't. And he said, well, what do you think is the most stable place in the world for people to do business? What? Companies doing business. What would CEOs say, who are in the know, is the most stable place in the world to do business? Now, naturally, I thought Western. I thought Norway. I thought Scandinavia. I thought Canada. Made sense, right? The answer was the Congo. And the reason for that is because the same president has been in place for 50 years. It's been the same policies, the same level of oppression, the same levels of nothing has changed. It's completely corrupt, but it's extremely easy to get things done because all you got to do is know who you got to pay off. I never thought of the world that way until that moment. Oh, gotcha. It's not a place like the United States where the policies change every day. It's where there has been the exact same thing, even in the face of, it's kind of sad, but that's how the world works. So, Chile, DR Congo, Peru, China, USA, Indonesia, Russia, Australia. Pay attention like what is that? BHP? BHG or BHP? Yeah, BHP. Old school. Have forgot about you. It's a good company, by the way. That's actually a pretty nice looking chart. So there's your baked in stop if you want to try to trade the copper side right here at the 200-day moving average. Chile's about 25% of world supply, and we import a ton from there. So again, the disruption, what this will ultimately do. No, it's not Ian Bremmer. Ian Bremmer is not a quantitative political risk person. Ian Bremmer is more of a qualitative geopolitical risk. Why does it matter? Well, all of this stuff is just going to flow to different places. It's just going to flow to different places. So These are the types of events that lead Brazil into a closer relationship with China. We've talked about this before. When you give other countries an incentive to not use the dollar or to seek other alternatives, they will take it. That was the lesson of the weaponization of the dollar and SWIFT with Russia. Russia couldn't engage. They're effectively were frozen out on their US dollar reserves. So they went and they created something else. China, because of the policies that we put on China with technology, they went and created their own AI, created their own phone infrastructure. Now you have a bilateral world in communications. And if you push Brazil far enough, and keep in mind, Brazil is extraordinarily important, not really just because of copper, but soy, corn, agricultural, gas, commodities. This is a BRICS nation, a very important BRICS nation, and one of the last ones with which we have extraordinarily tight, or at least a semi-good relationship in trade. This can push it further away. So keep this in mind. Now, why do we use copper for? Well, the bulk of it's wiring and power infrastructure. You know that. But why does this matter? Because, again, all of the AI data centers, all of the things that we need to create here, can't do it without copper. You can't build homes without copper. You can't do plumbing without copper, electrical machinery, alloys. It is that critical. It is that critical. No, WiMAXs are not as safe as closed-end funds. Green drivers, EVs, 4 times more copper than the ICE combustible engine. And keep in mind, the green desire of the world, this is important. This comes from, who's the guy? He's another geopolitical risk guy. He wasn't the one that I talked to either. But he's on YouTube, and he's always in the mountains and telling stories from the road. Anyway, he did an interesting story one day. He was on a podcast, and he was talking about the alternatives. And he said, look, out in the alternative space, you need, for the transition that they're talking about, you need 4 times the copper, 10 times the cobalt, went through every single metal. There were like 12 of them. 16 times the graphene. We have never doubled the capacity of one metal in production, even in wartime, ever in a decade. So it was impossible. But that said, the EV moves, California, everything that's happening in Europe, and even the marginal barrel, this increases that price. Well, that impacts the marginal barrel of oil. So there may be an impact on this if this lasts much longer. Peter Zeihan, thank you. Good call. You guys got it. I forgot him. All right. Grid upgrades, semiconductors, data centers. Look, this is one of those things that if this really digs in, then all of a sudden that AI trade faces some problems, right? The global supply chain extraction points are from Chile, Arizona, which is the largest area of the United States, where we did the bulk of our production in the DRC. We turn ore into copper concentrates, then smelted, produces blister copper, refining, right, into copper cathodes. Then we do semi-fads into wires, sheets, and tubing. And our end use is power grids, autos, and electronics. And recycling, 33% of copper use forecasted to rise. A lot of recycling. Keep an eye on Friedman, FRD. This stock is a steel company, but it's got a lot of input costs, a lot of tubing. This is an interesting name. This was an old school momentum name that we traded multiple times. The drivers on this are important because tariff pressure will distort short-term prices upward. The long-term supply underinvestment, that's going to be an interesting conversation of like how we see, and will this lead to further investment? This will impact the EV adoption. The question is this going to accelerate demand or slow it down? Are they going to try to move things forward? Slow permitting cycles for new mines. This is 7 to 10 years. This is really one of the key things that I think we have to think about in the United States. How are we going to get a new mine open? We don't get a lot of them open. It takes about 21 years here in the United States. We're slower than like half the places in Africa. And there are these tight supply constraints for recycle. Your major companies here are Freeport, BHP, Codelco, Zijin, Southern Copper, Glencore, and Anglo American. From a trading perspective, it's Freeport, it's BHP, and it's Southern Copper. These are your opportunities, right? Focusing on these names, FCX, SCCO, BHP. Look at the leveraged exposure. Pay very close attention to the recycling and the scrap plays. Just recognize there are rising input costs for manufacturers that will impact their margins. That'll just be one of the things you'll hear quite a bit about on CNBCs of the world. There will be more political volatility, a lot of questions moving forward. And obviously, environmental opposition to new mines. We have lots and lots of lawyers who love to shut down mines because, well, I speculate that they're taking money through NGOs, through China, and through Russia. That was what has been happening in Europe for the better part of a decade. So trend follow, copper futures, macro confirmation, long producers benefiting from the tariffs. FCX is obviously the winner here. Monitor the LME and the COMEX spreads for arbitrage signals. Watch the China PMI and the EV infrastructure rollout for demand signals. Consider copper and gold or copper aluminum pair trades. Very important. And legitimately, like, do you need another reason to join Blake? Become a member of Deep Currents. This is the easiest thing in the world. He was so far ahead of this. And now you see it. You see it in the price. You see what happened. You see that you had this breakout move, and he called the rotation and said, well, materials are going up. A lot of money flowing in. We didn't know why for a week. Well, now we know. People were front-running policy. So let's make it very easy for you. Join Blake and Deep Currents. Third time he's done this. Third time he's done it to me. So I tend to see things. I tend to see moves. I can't really figure out what the hell's going on. And then a week and a half later, you have this run. It's why it's important to screen. It's why it's important to pay attention to these things. So let's finish our day right now with some simple screens, right? We are always looking for the stocks that are pushing above that RSI level, that MFI level. Strength on the EMA. Strength on the MACD. We have 38 names right now. The key core ones, Pull is on this list. And Pull, if you recall, that's one of those very capital efficient companies, very strong capital efficient companies. It is a long-term industrial name, and it has a very strong ROICI. I'll talk about Pull a little bit later today. We're going to go through a handful of these names. But Jazz is on this. You're seeing a lot of pharmaceutical names pushing above these levels. These are the ones that become the strength that you're trying to play. And you set a tight stop, and you're just looking for momentum to continue. Jazz Pharmaceuticals. I have not heard this name in 3-4 years, but it's starting to move. Well, we know what happened with the pharmaceutical announcement. We've seen the LABU breaking out. You're pushing above that 20-day moving average, and you have a 110 stop period, right? 110. You're looking for a trade, stay at the 110, sell the 116. See where it moves the next 2 to 3 days. Keep it tight. Looking for MFI to push higher. On the other side, you got I can't pronounce this. I don't know what it is about my tongue. Regeneron. Nailed it. All right. Reversion potential here. Pushing above strong MFI, strength on the MACD, strength on the RSI, strength on the ADX, money flowing back into the pharmaceuticals, 525 now to 550. This gets above its 200. What's the potential? Maybe a retest of that 200. You just have to put yourself in the position to make the trade and hit the bid. XAS is on this, EXAS, Chesapeake, Equifax, EFX. That's a good company, by the way. EFX, Equifax, right? Trying to push above. But all signs, in this case, this breakout list, we'll go through this again today. RSI, MFI, MACD, DMI, strength on the EMA. You got burned on Regeneron a few months ago. Go back and look at that trade. Go back and assess that trade. That day that you hit the bid, where was the RSI? Where was the MFI? Where was the MACD? Where was the ADX? Where was it in relationship to its 20 and its 50-day moving average? You are looking for confirmations. You are looking for reason to buy. The chart will tell you. And if it's wrong, and it breaks down, you live another day. But you keep that stop tight. And if you get that breakout, very good things can happen. IEP, another name I have not seen in a while. Icon Enterprises, $9. Not a fan, but once again, doesn't matter what they do. The only thing that matters is momentum, and you got it right there, pushing above that 20-day, pushing above the 50. That's worth a shot too. $8 call. Maybe go out to next Friday. All right. Thoughts on Oxy? I will give you that before we head out of here because we do have a long-term position on Oxy. Mr. Buffett made another bad move because Mr. Buffett forgot about the capital intensity of running an E&P business. I like Occidental and what it's doing, but as I've said, I'm not a huge fan of the upstream space in oil and gas. I don't want to invest in the actual energy fuels themselves. I want to invest in the movement of them, right? Which is why I focus so heavily on the midstream. When it comes to Oxy, it is like anything else that can be traded based on the movements of the OILU. And right now, we're kind of in a no man's land with oil and gas. It might be a quiet summer for the energy patch, which is why the focus is probably going to be on EVs and NVIDIA and those types of names. But unfortunately, Occidental, despite a great business, is highly capital intensive. So one of the things that I had always done and traded until it broke, I consistently sold put spreads under wherever Buffett was buying the stock. And that held for a long time until it didn't. And now I have a long-term position in Occidental that have just been selling covered calls over and over and over again to lower the cost basis and then just walk away from that trade. But still, historically has been a great stock to trade, sell spreads on it when the OILU is in positive territory, and get out of the way when the OILU starts to break down. 9:23, I have gone over my limit. I hope everybody has a great day. I will be back at 12 today. And on top of that, we will do the second session for Tesla. I hope everyone has a great day. Thanks as always. I will be back tomorrow, just on the record tomorrow. Next week, the audio is going to sound a little bit different because I'm going to be out on the West Coast. So it's going to be 5:45 in Tahoe when I am doing this show. Oh boy. Have fun, everybody.